Hello students, I am Shashireka. Today I am going to deliver a lecture on investment versus speculation. So in our previous class, we learned what is investment. So let us have a look on investment versus speculation. Here, investment means employment of funds on assets with the aim of earning income or capital appreciation. Then what is speculation? So the investment and speculation, the two terms which are closely related. So both involve purchase of assets like shares. That means, what is speculation? Here, so speculation. What is speculation? Speculation involves trading a financial instrument involving high risk in expectation of significant returns. So speculation involves trading of a financial instrument. Here trading of financial instrument means buying and selling financial instruments. That means buying and selling securities for a very short period. So what is speculation? Speculation means buying and selling the securities for a very short period. So involving high risk. That means the speculation means taking of the business risk in the hope of getting short-term gainings. So the motive is to take maximum advantage from fluctuations in the market. Let us see. So in this picture, so he is the speculator. So this here Monday the speculator buy a pile of gold. Monday the speculator buy a pile of gold. After Wednesday he sell the gold and make a pile of money. So Monday he buy, Wednesday he sell, and that means after 2 days he sell the gold. That means the speculation means buying and selling the securities for a very short period. Why do the speculator buying and selling the securities for a very short period? In the hope of getting short-term gainings. In the hope of getting short-term gainings. How do he get? He get from the price fluctuations. Getting profits from the price fluctuations. That means speculation is a trading activity that involves engaging in a risky financial transactions. So risky financial transactions in expectation of making enormous profits, making abnormal profits from fluctuations in the market value of financial asset. So in speculation there is a high risk of losing maximum or all initial outlay. Here initial outlay means all investment. So but it is offset by the probability of significant profit. That means this risk is taken by speculator is properly analyzed and calculated. Let's see the difference between investor and speculators. So investment and speculation are two terms which are closely related. So both involve purchase of assets. So traditionally investment is distinguished from speculation with respect to some factors. Here the first factor is time horizon. First factor is time horizon. So the investor, here investor and the speculator. So the speculator has a relatively longer planning horizon. His holding period is usually of 1 or more than 1 year. That means the investor plans for a long time horizon. So that means the holding period may be 1 year to few years. So in the investment, the investor plans for long term holding period. That means the holding period may be from 1 year to few years. That means investments are held for at least 1 year. So that means it has a longer time horizon. Where here the speculator. Here speculator has a very short planning horizon. Speculator has a very short planning horizon. His holding period may be few days to few months. That means the speculator plans for very short period. The speculator plans for very short period. So the holding period varies from few days. The holding period varies from few days to few months. So that means the speculators hold assets for short term only. And next one is the risk return. So the level of risk undertaken in the transactions is the another difference between investor and speculator. That means the amount of risk undertaken. The investor, that means his risk is less. That means the quantity of risk is moderate in investment. That means the investor is not willing to undertake high risk. That means the investors hope to generate income or profit through a satisfactory return on their capital by taking on an average or below average amount of risk. And here speculator. So here speculator, his risk is high. That means the speculator willing to undertake high risk. So that means his risk is high. So the speculators who expect profits from the change in the prices. That means the speculator expects high return for assuming high risk. Here investor like to have moderate rate of return associated with limited risk. And next one is the decision. So decision is another factor distinguished between investor and speculator. So here decision attaches greater significance to fundamental factors and carefully evaluates the performance of the company. That means, so the investors considers fundamental factors and evaluate the performance of the company regularly. And the investors evaluate the performance of the company regularly. That means, so analysis and research is a key part of investment process. That means the investor evaluate different assets, sectors or trends that occur in the market, and he determined what factors affect the value of securities from microeconomic to macroeconomic factors. Here, the speculator attaches greater significance to market behavior and inside information. That means, so the speculator considers inside information here and market behavior. That means based on technical charts, market psychology and individual opinions, these are taken by the speculator. And another factor is funds. So in the investment, the investor uses his own funds. So investor uses his own funds and avoid borrowed funds. Why? Because the investor plans for a long time horizon. So, but in the speculation, the speculator uses borrowed funds along with his personal funds. Why? Because the speculator plans for a very short period. Finally, the investor and speculator. The investment and speculation both involve purchase of assets, but both are different. So, the time factor involved in speculation and investment is different. The investment is in long-term nature and the speculation is short-term. That means, so the speculator is interested in getting abnormal profits. The speculator is interested in getting abnormal returns. These are the main differences between investment and speculation. Okay, thank you.